The SEC just held another high-level crypto roundtable, and it's a big deal. From decentralized finance to global compliance, the future of crypto regulation is being shaped right now. And if you're a founder, a fund, or platform, you need to be ready. Today we're breaking down what the SEC has said at the conclusion of its most recent crypto roundtable on May 12, 2025. Compliance lessons for startups, risks for DeFi and NFT related projects, and what to expect next. So let's get into it. Hey everyone, I'm Corey, a startup lawyer helping entrepreneurs decode law, technology, and innovation. In this video, we'll unpack the key takeaways from the SEC Crypto Task Force Roundtable held on May 12, 2025. We'll look at what it means for crypto founders, investors, and platforms. So let's get into it. What are the core themes from the roundtable? What is the SEC prioritizing right now? What are strategic moves for founders and venture capitalists? And what's next before the final session that's going to be in June of this year? Okay, the first key takeaway. Global regulatory alignment is coming and is coming fast. The panelists at the roundtable agreed that without international coordination, fragmented rules will create chaos. Europe's MiCA or MiCA was a hot topic, and the SEC emphasized aligning standards across jurisdictions. Take a look at the video I have on MiCA and compare it to the Stable and the Genius Act, see below. So what is a key insight? Startups operating globally are going to need a unified compliance playbook. The days of playing fast and loose in whack-a-mole in one jurisdiction versus the other, I think those days are over. Now what's next? Compliance and risk management as a key takeaway from this most recent crypto roundtable, that's going to have to evolve. Real-time compliance, structured risk systems, and internal controls are no longer optional, they're expectations and they're mandatory. So what's the key operational takeaway here? If you're a founder or a platform, you're going to need to invest in your compliance tech stack now and not later. Okay, the third item, innovation versus regulation. There's still a tension here. So DeFi, NFTs, tokenized assets, these are all flagged as regulatory gray zones within a spectrum. But the SEC was clear. We don't regulate tech, we regulate conduct. A key founder tip, you're going to need to clarify your tech's purpose. This is going to be in the context internally at the company, externally for stakeholders and investors, and you're also going to need to make sure your technology, as it may change and pivot, adapts and aligns to securities laws early to reduce friction in your ultimate going-to-market strategy. So what about enforcement priorities and what's next? The SEC is focused on transparent investor disclosures, anti-manipulation safeguards, and bringing DeFi into securities law compliance. These areas are all going to require separate videos, but these are the high-level topics of what the SEC is specifically focusing on. I would say the easiest one to think about is transparent investor disclosures, because there's a history and legal regime for providing proper disclosures. And I think we're going to see the industry broadly settle around a set of best practices as these laws become clearer in the months and years ahead. When it comes to the DeFi topic and bringing it into securities law compliance, I have a strong suspicion that that's going to be a much more drawn out process, mainly because the technology itself is so much further ahead than what the law is actually capable of. And what I mean by that specifically is not that you can't regulate it fully to protect consumers. I mean that if you're going to have a thoughtful regulatory regime, the big issue here is going to be that regulators take steps to bring DeFi into the fold, but not actually kill the implementation and operation of the technology by trying to fit a 21st century technology stack into a 20th century legal procedure and process. So what's the strategy tip here? You're going to need to review how your platform discloses risk, how it handles data, and how it thinks about preventing market abuse. And you're going to need to be able to speak to this to a few different key stakeholders, to the public, to regulators, as well as to your investor base. Now, what are 5 key stakeholder takeaways? Okay, for founders, you're going to need to engage early and often with regulators. You're going to need to design products with legal frameworks in mind, in hand with your counsel. If you're a venture capitalist or a private fund in the space, there's going to need to be increased due diligence on compliance and understanding the complexity of the industry as these rules become clearer. And there's going to be scrutiny and audits that should be expected by funds from their regulators. Now, if you're an exchange or a platform, strengthening market surveillance tools is going to be a continued improvement process item. That has been the case and is going to continue to be the case. As we get tightened market structure rules in the United States, I think we're also going to see corresponding tightening of KYC and AML processes. I suspect that technology is going to make this a bit more seamless than it has been historically. At least that's the hope. So now let's look at the compliance readiness playbook. So what do you need to do to try to get ready for this changing and evolving landscape? You're going to need to develop global ready compliance policies from day one of entering your market. You're going to need to integrate smart risk controls with real-time tracking, API triggers, etc. You're going to need to train your teams quarterly on staying up to date with SEC rules in the United States, as well as global regulatory changes where your business is operating. All right, so let's recap. The SEC is working hard to align with global regulators. Compliance is going to need to scale with your protocol, with your project, with your technology stack. Innovation is not going to be exempt here from transparency and compliance as the digital asset ecosystem becomes more part of mainstream traditional finance. Startups and funds will need to evolve and level up their due diligence to remain in compliance. And the SEC has a final crypto roundtable that's going to be on June 5th and will solidify many of these priorities. So make sure to stay tuned for an update. Join me on the path to decoding law, technology, and innovation to grow your business. And don't forget to like, share, subscribe, and hit that notification bell. Until next time.